Hi, this is Sean Hyman from mywealth.com. Just want to talk to you about some reasons why I believe that the U.S. dollar will probably fall in the coming months to a year or so ahead, and some reasons why. In the past year and a half, the dollar has been able to do no wrong. It's really been a safe haven as money has run to the world's reserve currency. I believe that's starting to transition and shift away from the U.S. dollar into foreign currencies. So let's get into this and take a look, and I'll tell you why.
Be sure to check out the written blog at www.mywealth.com/blog. I want to talk to you about 7 reasons why the dollar will crumble once again. In this past year, the dollar has soared, and I think a lot of people will continue to think that that's going to continue. But there's a lot of things starting to stack up against the dollar that let's go over. Number 1, the risk appetite is returning to the markets. And the reason why I think this is because the fear gauges, or what I term the fear gauges, which are the VIX, the LIBOR rate, and the TED spreads, have all diminished significantly. Simply put, when these charts go up, the fear is increasing and the trust is decreasing. And when these go down, the fear is diminishing. And so these can be charted for free at stockcharts.com, and you can use symbols below, which are $VIX, $TED, $LIBOR, LIBOR. Number 2 is GM's bankruptcy. If this American icon goes bankrupt, it makes investors lose confidence in the U.S. dollar. Money hates uncertainty, and that's exactly what we have here from an industry that has historically been a world leader. Number 3 is friction with China. Paulson, one thing he knew is how to handle China. And he may screw up in some areas, but he knew how to handle the Chinese. He had a great relationship with them. So far, Obama and Geithner don't have a clue in this regard. Normally, China buys our U.S. Treasuries like clockwork. However, in January and February, they were net sellers of U.S. Treasuries. Not good for us over here in America. The problem, China is the biggest holder of U.S. Treasuries in the world. So, it's definitely somebody worth paying attention to when they back off of buying our Treasuries. Not good. Number 4, commodities have reversed their downtrend. Now, this isn't good from the dollar's point of view because commodity prices are on one side of the teeter-totter, if you can envision it that way. Things like gold, oil, lumber, copper, etc. And the dollar is on the other side. So when commodities go up, it naturally pushes the dollar down and puts a weight on the price of the U.S. dollar. So a rise in commodity prices weakens the purchasing power or the value of the U.S. dollar. That's another way of saying or looking at it. Number 5, money is moving back into the emerging markets, into their currencies, their bonds, and their stocks. Now, when investors start to stick their necks out once again for higher returns and yields, they flee the U.S. dollar as a result. Number 6, U.S. Treasuries will start to crumble. Now, this may not happen immediately due to the Fed's enormous purchases, but in time, this Treasury bubble will burst. The Fed's trying to buy these Treasuries, push down yields, and help out the housing market, among other things. And this can only last for so long. Once all that's over, said, and done with, and possibly even before, the Treasury bubble will burst. Whenever this does happen, international money will shy away from the dollar as more confidence is lost in our bond market. Number 7, from a technical standpoint on the charts, the U.S. dollar index is failing to make new highs. This shows that money is slowly sneaking out and headed for greener pastures. For foreign currencies like the Turkish lira, South African rand, which have recently broken into new uptrends, and Australian and New Zealand dollars, which have built a great base, and it looks like they're going to head upward as well. So with all this unfolding, there's never been a better time to get started into the currency market. So I'd encourage you to not wait, to get into a course and get educated today at www.mywealth.com. Click on the Courses tab. Thanks so much.
Hope you enjoyed that today. You can find the written version of the blog at mywealth.com/blog. You can also find our courses by clicking on our Courses tab there. Find courses ranging from personal finance to stock investing to even currency investing. I'd encourage you to get involved with those. You can purchase them for less than the price of a book. You get live instructor access, which is really invaluable because these are people who really do live and breathe and trade the markets and invest in the markets themselves. So you're able to tap these years of experience, and there's no better time to do this with the economies and the markets being in such disarray as they are. So I challenge you to do that today. Thanks so much.